So I rejected this stock yesterday. This came up in my scan in my radar yesterday, and I looked at the chart. I looked at multiple factors, and I decided that I will not buy this stock the next day, which means today. So I was looking at this stock yesterday night, and today the market is open right now. Today is 30th of August. As I record this video, it's 11:45. The market is open, but I have neither put a alert on the stock, nor do I plan to buy the stock with an automatic order. I want to discuss the reason why. Now, as I discuss stocks with you, I want you to pay careful attention to what are the things that I am looking at when I am looking at a chart, whether it is MarketSmith platform or whether it is TradingView. I want you to see what are the things that I am looking at which is leading me to reject stocks. And I repeat again and again that your trading performance depends not on what stocks you buy as much as it depends on what stocks you choose to reject. This is extremely important. So, your skill, your ability to reject stocks properly is a critical determinant of your good trading performance. So let's have a look at this stock. This is REC. It is in financial services specialty industry group. So REC, I guess, is Rural Electrification Corporation, if I am right. I have not gone into the fundamentals. But as you can see, it's a large cap company, huge market capitalization. Sales are a huge 50,000 crore. It's a very big company. Okay. Now you look at this base. You see this green dotted line, this green line. So wherever I click on this base, these two rectangles will open up, and it says that pattern flat base stage one. So this means it's a base one. So it's forming a new base. Okay. So it is the base count has been reset, and this is the first base that the stock is coming out of. Now, if you remember, I told you first base means early stage. The stock is going into early stage, and it might start a big bull run from here. Okay. That is what this means. Pattern flat base and stage one. It's probably because the base has been reset during this period. That is why they are calling it base one. Now that's good. That's all fine. But look at the consolidation inside the base. I see it drifting down. And yesterday this bar was not there. So if I show you the trading view, yeah, see, this is REC. So if I draw the base for you, I draw it like this. So this candle was not there. This is today's candle. That's a live candle. Okay. See, this is what I saw. So 0.1 in the base, 0.2 and 0.3. So there are only 3 points in the base. I want minimum 4 points in the base for me to consider buying the stock on the daily time frame chart. So this is a major reason why I rejected the stock. Number two, you look at the group rank. It says 40. Now I prefer the group rank to be less than 20. So I want the best of the best uh, industries. I want my stock to be in the best of the best industries as possible. But this is in the last industry which comes in my filter. I look at industries with rank from 1 to 40. So this stock comes in the last industry. But that is still fine. It is still coming in my radar. That is fine. However, you look at accumulation distribution rating, it is B. I would prefer this to be A rating. I would prefer this to be less than 20. Then these numbers 88, 81, I would prefer both of these numbers to be more than 90. Not very convincing. But still, I have bought stocks where both of these numbers are more than 81 because there were some other factors which were in favor of this company. For example, a very tight base, nice consolidation. Okay. So if there are other factors which are in favor, then I will not pay much attention to these numbers. As long as they are above 80, I am fine. Master score is 69. I prefer this to be more than 80. Okay. The number of funds that are holding the stock has increased, which is good. Management has more than 50% ownership in the stock, which is good. But you look at the earnings. If I go to consolidated, I want this number to be more than 40%, the quarterly growth in the EPS. Current quarter compared with the same quarter last year, it should be minimum 40% or at least 25% as per William O'Neill. Okay. Or if this is not 40%, then the average of these two numbers, the quarterly sales growth, should at least be 40%. None of these conditions is satisfied. So this is another major reason why I would not want to hold the stock, at least as a positional trade. I might buy it as a swing trade if it sets up properly on the right side, because both of these numbers are above 80. Institutional demand is there, the industry group is strong. I might buy the stock for a shorter term move, but for a long term positional trade, there is no way I'm going to buy this stock and hold on for 6 months, 1 year. Impossible. I will have to give this stock more time. If I end up buying the stock, if it creates some other baby candle here, so for example, if you see this, now if this candle closes like this, now you have 4 points. 1, 2, 3, 4. There is good price tightness on the right side, and the buy point will come in the green zone. In such a case, I might buy the stock for a short period of time, like holding period could be 1 week or 2 weeks, and I would aim for a double digit return, more than 10%, less than 40%, somewhere between that. Okay, within 1 or 2 weeks, that would be my target in this stock. I wouldn't hold it for a long term, because the only thing that pushes a stock up and keeps the stock going up for 6 months, 1 year, 2 year, 3 years, the only thing that keeps the stock going up is three things: uh, earnings growth, sales growth, return on equity. Okay, very important points to look at. As you can see here, the cash flow is negative. That is another negative factor. So, a lot of negative factors here. Poor base formation. Okay, not much earnings growth, not much sales growth. Industry rank is not optimal. Institutional demand is not optimal. EPS rating, price strength rating, preferably if they were more than 90, I would be even if one of these numbers was 90, and if master score was more than 80, I would be more excited about the stock. Plus, this is a large cap stock, so getting a sizable move like twice, thrice in a large cap stock is not easy. Another thing I want you to notice, and this is very subjective, okay? Look at this stock. Whenever it tries to form a base, it tries to go up, it doesn't sustain, okay? It comes crashing down. See, falling window. Plus, look at this stock. In a single day on 4th of June, the stock crashed 25%. Now, I understand that was the election day in India. It was an extraordinary day, but a stock which can fall 25% in a single day, I don't want to get involved in such a stock, because it is very dangerous. If it can do this here, why can't it do it here? Okay, so that is my concern. So whenever the stock has tried to, there was a base here. See, it tried to break out, did not go up. Again, there was a base here. See, green dotted line, tried to break out, did not go up. Again, it came crashing down 25% here. It's the same chart, the daily time frame chart. So every time the stock tries to break out, something happens and it crashes down. Why is this happening? Very simple. The earnings are not there. The earnings growth, explosive sales growth is not there. Plus the industry rank. Just yesterday, this industry rank has become 40. Okay, before that it was more than 40. So this stock was not even in my radar. Okay, so it's just recently that the stock has started to show some promise. And you look at the relative strength line. If I join these 2 points, okay, the relative strength line is declining, which means what? The Nifty 50 index is doing better than this stock. So rather than putting your money in this stock, you are better off at the moment to put your money in Nifty 50. You would end up making more money in Nifty 50 than putting your money in this particular stock. Plus, you look at the PE ratio is 11. 11 is a very abysmally low PE ratio. So something is wrong. A proper growth stock generally has a very high P ratio. Okay. Moreover, if you look at the weekly chart, the stock has already had a run. Although the base is the first base as per Market Smith, but if you look at the price, let's wait for the weekly chart to open up. No, Market Smith is slow. Maybe because the market is live right now. That is the reason why it is slow. There's nothing wrong with my internet connection. I have a direct LAN cable. But anyways, something is wrong. The daily chart, yeah, the daily chart opens quickly. Let's see what happens to the weekly. Why is weekly not opening? Yeah, fine. See, the stock came out of this flat base, or we could say this is a cup with handle. Okay. It came out of this area. This is 120. Now the stock is at 160, which means the stock has already gone up 4 times, right? Almost 4 times. I would say more than 4 times. This was in 2023 April. Now we are in August 2024. That means in 1 year, the stock has already shot up 4 times in 1 year. That's a 300% return, right? In 1 year, close to 1 year. And then you are forming another base one. So it is not actually the first base. It is a base which is much higher than these bases. So if the stock completely reverses, cuts down all of these lows, then we would term it as uh, base one. But that is not happening. The stock has not undercut the low. I don't know why Market Smith is calling this as base one. This is easily base three, four, or five. Okay, so I don't look at this data as seriously. I have my own way of calculating the base. I mean, if a stock has gone up 300% in 1 year, and how can we call it the first base? Okay, it has to seriously undercut the previous lows before we start calling it a base. It has to seriously stay down for multiple weeks, months, and then form a nice cup, or double bottom. And then I would say, okay, now the base is probably starting. Now we can reset the base. Okay, so as per my method, the stock is still in a late stage. I don't want to get involved. Plus, these figures are not very encouraging. You don't see much conviction when I speak about this stock. An ideal stock would be this number is more than 80. Both of these numbers, or at least one of these numbers, is more than 90. This number, accumulation distribution, is A. Group rank is less than 20. EPS growth rate is around 20-25%. Earnings stability is more than 90. P ratio is near the high. P ratio is not that really important. Return on equity should be minimum 17%. Okay. Cash flow should be positive. Management ownership should be more than 50%. Number of funds should be more and rising. Sales growth should be accelerating, preferably more than 40% or 25%. Quarterly earnings growth should be accelerating, and this number should be more than 40%. Okay. The long term debt to equity ratio should be smaller. Here you see it is 424%, which means the debt is 400 times more than the equity, which means it's a highly leveraged company. So a highly leveraged company, which has already gone up 4 times in 1 year, it's becoming vulnerable here. It's becoming volatile here. Why should I get involved in the stock right now? Okay. Plus, it's a large cap stock. I would prefer it to be a small cap, mid cap stock, so that the run is very fast. In smaller companies, they run up faster than the larger companies. Okay. So I have given you what I am looking for. Okay. Plus, the chart, it doesn't look quite encouraging, right? See, you see this much volatility. It's like too much for me. I don't want this much volatility in the stock. Okay. And you don't see many closes in the green zone. The I would want to see 4 5 candles close in the green zone in a very tight range. The range of the candles must be very tight. What is range of a candle? The range of the candle is high minus the low, the entire range. Small range candles, tight closes near each other in the green zone, coming out of the base, that would be a nice swing trade in this stock. But as far as positional trading is concerned, I wouldn't put money in the stock from a long term perspective. Okay, I might hold it for just 1 or 2 weeks, and I wouldn't put more than 5% of my portfolio on this trade. That too, I would not put 5% entirely. First, I will buy 2.5%. Maybe it goes up, creates another base on the daily time frame. I might buy another 2.5%. That would be my approach towards the stock. Plus, when the stock starts to go up, I would be very quick to move my stop loss up, because the stock has already shot up 300 times in uh, in 1 year. So it's very vulnerable uh, to a drop, something like this. So it's a very dangerous situation. Okay, so if it sets up properly, I might enter. If not, well, I'm happy holding the stocks that I have right now in my portfolio. So I'm fine with that. So these are the things that I am looking for. So as you can see, I am doing a proper holistic discussion of a particular stock as to what are the factors that I'm looking at. I don't even know what is the business of this stock. I don't even know what is the business model. How does the company make money? But those factors come later. After I have bought a position in a stock, I would be interested in, okay, what do they sell? Whom do they sell to? Why are the earnings high? Why are the ratings, the price strength rating, earnings rating, group ranking is high? I would go into those factors later, because currently I have a lot of hundreds of stocks to check. If I keep checking the business model of each company, I would be spending too much time. And if the stock is not forming a base properly, it is not worth my time. So I would start with a smaller position in a stock. As it starts to move up, I would be more interested in actually looking at what is it that I have bought, why is it going up, what keeps the stock up, why are the ratings going up. Okay, those things I will look at later. But for buying purposes, whatever factors that I have discussed in this video, I think those are enough. You can't look at 100 factors. There are too many things you can check about a company. If you check too many things about a company, you might end up talking yourself out of the trade. Okay, just look at the 8 or 10 factors that I have discussed with you. It covers both the fundamental and technical aspects of that position. It also gives you a proper risk management, position sizing plan on the trade. You can also decide how long you want to hold on to the stock, depending on the base and certain parameters which I have discussed in this video. And you can plan the trade accordingly. So whatever I have discussed with you, this much information is enough. We have looked at the daily, we have looked at the weekly, we counted the base, we looked at the previous move in the stock, we looked at the base, we looked at the ratings. This much analysis is enough. If you try to do more analysis than this, then you will end up doing analysis paralysis, and finally you will say, okay, no, I don't want to buy the stock. You might get scared out of the stock. Okay, don't do that. And don't forget to like, comment, and share this video so that other people like you who are interested in this stuff can learn as well. Thank you so much.